What's going on, Mullen fam? Back with another video. We got banks collapsing and about to be investigated. We got the Fed not knowing what to do with rates from here on out. And we also got Mullen stock down over 11% on the day. My face is not going to be in this video. And no, it's not because Mullen stock is down. No, not because of that. I just recently had an oral surgery and my jaws look like Ed, Edd and Eddy when they were walking around with jaw breakers. Now I know some people were wondering about this short sale restriction list that Mullen Automotive is on again. And according to this article, Mullen has been on it at least 10 times since January. They're saying Mullen Automotive triggered the SEC's short sale related circuit breaker, placing Mullen stock on the short sale restriction SSR list. According to these regulations, investors may no longer sell Mullen shares short unless the stock price rises on that particular trade. Academic studies have found these uptick rules effective in helping prevent bear raids on certain risky stocks. That's interesting. I don't think that has been helping at all. The short sale restrictions were implemented by the U.S. Securities and Exchange Commission in 1938 to help prevent the type of speculative selling that sparks panic. Rules require circuit breakers to kick in whenever a stock drops 10% below its previous close and remain in place for that trading day and the next. Now let's head over to Investopedia. Key takeaways from the short sale rule says between 1938 and 2007, market participants could not short a stock when its shares were falling. The Securities and Exchange Commission lifted this prohibition in 2007, allowing shorting to occur on any price movement. Then in 2010, the Securities and Exchange Commission adopted the alternative uptick rule, which prohibits short selling when a stock has dropped 10% or more. Now, this is the important piece to keep in mind on how these short sellers still short during short sale restrictions. It says when the rule is in effect, short selling is permitted if the price is above the current best bid. The alternative uptick rule generally applies to all securities and stays in effect for the rest of the day and the following trading session. The term best bid refers to the highest quoted price available that somebody is willing to purchase a particular security, and so reflects the best price that somebody could sell at the market. The best bid is the highest among all bids offered by competing market makers. Put simply, this is the highest price an investor is willing to pay for an asset. Back to the article. It isn't the first time Mullen has triggered this circuit breaker. Since January, the California-based startup has triggered short sale restrictions at least 10 times, most recently on March 10th. And the electric vehicle startup continues to experience high volatility over the same period. Mullen stock has moved an average of 6% from its previous close on a daily basis. With that being said, do you all notice how soon as the market opens, there's a stall in price action, and then all of a sudden we get a slight movement up, then a crash down in the stock price? That's because these short sellers are most likely waiting for it to rise just a little bit or battling for that best bid price in order to open that short and drive the stock down. One thing to keep in mind is Mullen's RSI. This is the daily RSI going into extreme low territory down here. The last time it hovered down in that range, Mullen got a pop in stock price from around 21 cents up to 60 cents. I also want you guys to keep an eye out on Mullen's Bollinger Bands on the weekly, which I'll show you guys after reading this text. It says, when the bands squeeze together, it usually means that a breakout is getting ready to happen. If the candles start to break out above the top band, then the move will usually continue to go up. If the candles start to break out below the bottom band, then the price will usually continue to go down. So let's go take a look at Mullen's Bollinger Bands on the weekly. And if you zoom in, you'll see that Mullen's candle is starting to hit the bottom Bollinger Band, which could predict a big move to the downside. But however, as I showed you guys in the RSI just previously, that it's already in oversold territory. And the last time that it was that low, Mullen got a bounce from 21 cents up to 60, and you see where the Bollinger Bands opened up here for that move as well. And you can also see that Mullen's candles were on that bottom Bollinger Band before this move up as well. So with that being said, just because the candle is at this bottom Bollinger Band, it could mean that Mullen could get a breakdown of more down pressure, but it could also get a bounce back towards the top of the Bollinger Band to get a nice move to the upside, breaking out just as I showed you in the previous screen. And the TTM squeeze has been trying to go green for quite some time. It actually broke green right here slightly, but with all the selling pressure and suppression on Mullen stock, it is not being able to get that nice breakout that it wants. And in my opinion, on the technical side, Mullen has been ready to run, has been set up to run for quite some time, but just has not received the right catalyst from the company. So there needs to be some buying pressure coming in. There needs to be bulls stepping in. There also needs to be a catalyst presented from the company desperately to keep this price from breaking down below this Bollinger Band and making another big leg down on the price. That's all I got for this one. Hope y'all find this information valuable. Stay charged up out there. Don't feed the fear, and I'll catch y'all on the next one. I'm gone.
Go. Blessed in abundance. Look who raised from the dungeon.